So, this is my strategy for ATI, Allegheny Technologies. In the standard chart here, we can see what looks to be a typical head and shoulders pattern, where this is the first shoulder, this is the head, and this is the second shoulder, S2. Now, I have made this is somewhat of a delayed call. I wanted to make sure that it broke below this level right here, which I will circle. I want to make sure that it broke through the $61.70 level, which it did yesterday. So today, I advised at the open that we should be buying and get in at the best price you can at the open. I got in at $61.35, which was very fortunate. And then it broke down. And actually we can see that the volume for today, which I'll also circle, is very representative of a bearish breakout. The volume today was much higher than it has been in the previous days, with also a large price movement. The price went down 3.06%. Now, what we can do, assuming that you got in this morning, here are targets. We measure from the neckline, the blue line, to the very tip top of the head at around $72.72. Flip it to the downside, see if we can get an idea of where it's going to, and our expected price target is about $52.50. So target $52.50. Now we look at our stop price, and actually after today's price movement we're going to move it tighter. I initially said this morning let's make it somewhere around $65, which exposes to a lot of risk. But now that we've seen the price move in our favor, we're going to make sure that we lose at most maybe 0.5%. So we're not going to tolerate throwbacks, of course. So this is what we're going to do. Our stop level is going to be a close above, let's see, $62.50. So that exposes us to $1.15 of risk per share. We expect it to get to $52.50, which is, from my entrance, it's $61.35. There's $52.50, $8.85 of reward. So now we have according to the Bolkowski studies, we have a 55% chance of success. So our standard risk-reward ratio is going to be just $8.85 divided by 115, and that's 7.7, which that's good. Now we weight it with the probabilities, so we give ourselves a 55% chance of success and divide that by our $1.15 risk and our 45% chance of failure. 45 times $1.15, and that gives us an adjusted risk-reward ratio of 9.41, which is very favorable. Now also, you have to take a look at the point and figure chart, which I posted on the blog post, and we actually had a sell signal on that back when the price was above 67. That was an initial sell signal around this area right here with a target of 63. That initiated the downtrend. This second sell signal, which we just took advantage of today, that one is confirming our belief, and we should actually, since we're trading with the downtrend in this one, and not picking a reversal, we should have more confidence that it's actually going to keep going down. Now, here's what I think is going to happen. Just my complete estimation, just based off of my own experience, no statistical basis to this. It broke down today. It's going to go down to the moving average. It's going to then bounce up to this blue line, and then after that it's going to continue back down to our price target of 52.50. So we have a pretty much favorable trade here. Time frame for this, I am expecting it to, I'm just doing this right now, I'm expecting it to hit our target, and watch what I'm doing. I'm using this as our strongest resistance line. Our target's 52.50. I expect it to reach 52.50 at the latest by mid-August. It will likely be before. So this is a very favorable trade. I highly recommend taking it. Hopefully the price will pull back if you haven't already gone to the trade this morning. If you can, get in around maybe $61 if you can. If you can't, don't go any lower than $60. Alright, thank you for watching. If you have any questions, post in the comment box.